Good morning. It's Jeffrey Christian of CPM Group. It's about a little after 10 o'clock on Tuesday, the 23rd of August, here in New York. Wanted to talk basically about the markets and outlook. We've seen another sell-off, especially on Monday. If you look at the decline in gold and silver prices on Monday morning here in New York, what you see is that it was part of a broad-based sell-off. There's a massive decline in the values of stocks, bonds, currencies against the US dollar, agriculturals, oil and energy commodities, and a full range of metals commodities, including platinum, palladium, and base metals. So gold and silver were not reacting or declining based on anything specific to the gold and silver markets. They were really looking as part of a broad-based sell-off as investors and financial markets more broadly continue to struggle to try to understand how it is that the Fed and other monetary authorities and central banks around the world are likely to maintain a firm interest rate policy for at least the next several months as they seek to combat a jump in inflation that reflects both cyclical and longer-term price pressures. You know, the reality is that there are very complicated economic and financial issues going on right now. Financial markets, including precious metals, perhaps were a little bit over eager to say that the Fed and other monetary authorities would be pivoting away from rising interest rates very soon and moving toward lowering interest rates because of economic weakness. That hasn't been the case. The Fed and other monetary authorities, as well as mainstream economists, have cautioned against such views as being premature and too early, but those views were very common. They were particularly common in the gold and silver promotional industries because the view is that rising interest rates and the consequently stronger dollar are particularly negative for gold and silver. They're not. They have some negative consequences, but interest rates are so low that they will remain unattractive as a competing asset on a longer term basis of gold and silver for some time. And they probably are not necessarily a strong headwind other than the psychological effect that they have on investors. So a little bit different format today. I have gold prices here. On the left-hand side are the prices since 2019. And you can see, how the price rose sharply from 2019 into the middle of 2020. And it's basically moved sideways ever since at record level prices. On the right-hand side, you see the prices since 2011, just to emphasize the fact that the prices, while they look low compared to where they were at the beginning of the Russian invasion of Ukraine at the end of February, beginning of March, while they look low in that comparison, they are in fact still at record levels. There is a potential for a spike down. We've been talking about this. It diminishes somewhat with the passing of August, but it will continue into September after the next 2 weeks for some time. That's because there still are strong economic conditions. There's a strong dollar. Interest rates are likely to be rising in September again in the United States and elsewhere in major economies. You probably will see strong employment figures. You're going to see a further reduction in inflation rates. You might see some other signs of economic strength. And those factors could have a negative effect on gold prices and silver prices. In terms of gold prices, we have been saying for some time that a spike down to 1680, such as we saw twice last year, is possible. And it was most probable in the period of June, July, August. Maybe even 1650 was possible, we have been saying, and we've said that as recently as yesterday's gold trade recommendations that we issued to our paying clients, where we have a longer term view. We have the next 1 or 2 weeks, but then we also have the next 1 to 3 months that we talk about. After August, the idea of a price drop below 1700 may dissipate somewhat. You may continue to see price weakness in September, we think, but beyond that time, maybe the price stays above 1700 and the decline is to 1700 or 1720. Very similar pattern in the silver market. Prices have come off. We've talked about the relative weakness in silver prices relative to gold over the last few months. You continue to see that. Silver prices could drop as low as 1740 over the next couple of weeks. We do think that, as with gold, as you move from August into September, the price will probably remain weak, but probably less vulnerable to that steep of a spike down. You still have prices that are likely to remain weak for a while and possibly strengthen into the fourth quarter. And again, here you can see the weakness in silver prices has been greater over the last 3 or 4 months than it has been in gold relative to where we were in the period from the middle of 2020 into the middle of this year. And you can see here on the right-hand side from a longer-term perspective that while gold prices have reached record levels compared to where the previous records were in 2011 and 2012, 2011 on an intraday basis, 2012 on an annual average basis, silver prices did not get as high, and they have not gotten as high, and they're closer to that 2015, 2019 consolidation range than they are to their previous highs. And that reflects a difference in investor attitudes toward gold and silver. The reality is that more investors have been more interested in gold than in silver, and you also have central banks buying gold where they do not buy silver, and that has also helped gold prices stay strong relative to silver. Those are our shorter term views. We have, I need to, because there is some strange selective perception, it's called psychologically, about CPM Group's price attitudes. We continue to expect gold prices and silver prices to rise and to rise strongly at some point over the next 5 to 10 years. Our targets for that remain around 2024, 2026, in that range. Could come sooner, could come later. We look at the fundamentals of each market, and we also look at the macroeconomic and the financial market and the political environment that heavily influences all aspects of gold and silver markets, but especially the investment demand. That's the prime driver of prices higher or lower. We have, as of yesterday, finished a major update of our 10-year projections for gold supply, demand, and prices, real and nominal prices. We have been doing these 10-year projections since the 1980s. They are available for purchase from CPM Group. We run a main scenario, and then we have secondary and tertiary scenarios and assign different probabilities to them as we go forward. We finished our gold redo. We go through this on a quarterly basis, and the data changes daily as market conditions change daily. But at least once a quarter, we sit down and we say, what modifications do we need to make to our 10-year projections? And we, like I said, have done this since the early 1980s. Our silver 10-year projections are being reviewed now and under production. Our data is done, and it's a matter of writing up the results. We expect to have that long-term silver 10-year projections report completed really by the end of August. So I've got an August date here. It may be the first week of September, but those reports are available. And it's important to understand that while we are talking about the potential for further weakness in the next week or two and into September, from a long-term perspective, we remain of the view that gold and silver prices will rise and will rise sharply at some point over the 10 years. So when someone tells you that we're always bearish, tell them that they should do their homework and they should not practice selective perception. They should read for comprehension as opposed to confirmation. Just get kind of tired of correcting people. Silver will be at the Silver Symposium next week. There'll be 3 of us from CPM Group. I'll be giving a speech on the real silver market, talking about supply, demand, inventories, investment demand, where it's going. We'll have an open forum question and answer period where people can ask us all sorts of questions. We might not answer them, but they can ask us. And then we're going to have this evening presentation and discussion where we'll have Matthew Hunter, who's the retired former deputy director for market surveillance at CFTC, who really brought market surveillance up sharply at the CFTC during his time there. He will be there. Bob Coleman will be there. That event is being sponsored by Bob Coleman's companies as well as by the prospector. You can sign up to attend the Silver Symposium. There'll be a number of mining companies there. There'll be various newsletter writers. It should be a very interesting event in Spokane. That will be next week. That may kind of skew some of the videos because I'll be leaving on Friday morning. So the Friday morning video this week probably will be recorded Thursday. And then Elliot and I will probably record next Tuesday's report video from Spokane. You can buy our yearbooks. You can become a retail investor client of ours. There's a variety of other things, including 10-year projection reports that are available from CPM Group, as well as consulting, asset management, commodities management, and investment advisory services. In the meantime, take care. Enjoy what's left of August if you're in the summertime months of the Northern Hemisphere. Take care of yourself, those around you, and watch out for the whole world. It's getting to be ever more interesting. We'll talk to you Friday.